all about the South.
Good day, everyone, and welcome back in. Time for Money Tuesday now. Wells Fargo is now getting rid of personal lines of credit, and customers with account balances will be required to begin a payoff schedule. So this will affect them in a number of ways, of course, but one of them could be their credit score. So this morning, we're taking a look at whether you're a Wells Fargo customer or not. We're looking at ways to improve, perhaps maintain a good credit score. And the man this morning joins us, Stewart Welch from the Welch Group. Good morning, Stewart.
Dennis, good morning. Good morning.
Good to see you. So we're kind of bouncing off the fact that Wells Fargo is changing their line of credit. And so, first of all, how will that affect those customers, their credit score?
Customers, if you're with Wells Fargo and you have a personal line of credit, they're going to ask you to pay that off. They're going to eliminate those. And that can negatively impact your credit score. And the reason is because of something called credit utilization. So let's say you have a $100,000 personal line of credit with Wells Fargo and you're required to shut that down. Now all of a sudden the total amount of credit that's available to you is $100,000 less. And if you already have some debt on, say, a car loan or credit cards, what happens is the amount of credit you're actually using compared to what you have available gets squashed. It becomes a much higher number. And that number, if it's over 30%, is going to negatively impact your credit score. So we thought we'd use this as an opportunity to talk about three things that you could do to help your credit score.
All right, now some are pretty obvious to me. This first one, though, kind of surprised me when you say request a higher credit limit, because that can affect you too, right? But you said the payoff is worth it.
Yeah, it is. So you're requesting, again, you want to have a relatively high access to credit, but this is a crazy thing. You don't want to use much of it. So you go to your existing credit card company and you ask them, can they raise your limits? That's a pretty normal thing to do, but there's a little trick here. You want to ask them to do it without a hard inquiry. So a hard inquiry is where they actually go into the credit bureau and they ask to review your credit, and it creates a ding to your credit and then actually lower your score, but only temporarily. So you'd like to get in there and say, you know, I've been working with y'all for 10 years or 3 years or 5 years, and I'd like to raise my credit limit. And a lot of times they'll actually do that.
So they would do it on what kind of customer you've been with them, regardless of checking your credit score currently.
They can do that. So they certainly have the ability to do that. I've had my own increase pretty significantly, and they never did a credit ding to do that. Sometimes they'll actually automatically do that to encourage you to put more money with them.
All right, the second thing you talk about, I think the obvious thing is pay your bills on time. But one thing you said that pay during the month. So you're saying before the due date?
Yeah, so the first thing is the one thing that'll kill your credit score is to be late on bill payment. So that's the first rule, is you want to pay it on time. But a little known trick is if you pay let's use credit cards. If you pay it off during the month before the credit statement drops, that'll actually help you. So for example, if I put a big charge on my credit card, instead of waiting for that to drop, I'll actually go in sometime during the month and actually pay it off. And I can do an automatic transfer from my checking account to make that payment. So it only takes me literally about 3 or 4 minutes to do it.
All right, we're out of time. Dispute errors, though. Make sure that you do check your credit report is the final issue on the list there. Stewart, thank you very much.
Thank you, Janice.
All right, good to see you. All right, still ahead.